Welcome back to another episode of In Focus with Haversine Funding, the show where we discuss insights, trends, and strategies that drive success within specialty finance. I'm your host, Nolan Reichert. I'm joined today by my co-host, Jen Merritt-Puri.
Thank you, Nolan.
Jen, thanks for joining us. Today we have a very special guest. We have one of the most influential voices within specialty finance who's been around since the beginning of time of factoring, was sitting in, while the UCC was drafted, needs no introduction. Bob Zadek of Buchalter PLC. Bob, thank you so much for joining us.
And by the way, I looked at all your other shows. When you said a special guest, you said that every single show you've hosted. So who are you trying to kid?
You are special.
You are
Bob.
very special, yes.
Get it out from all the others.
Yeah.
I love it.
Yeah.
I love
Well, nonetheless, you are a very special guest. So we really do appreciate you joining us. We're really
Very much
excited to dig into your story, the evolution of factoring as it is today. All the golden nuggets that you can share with us with, trends and what to expect, and really excited to just kind of pick your brain, but just diving into it. How did you get into the space, and what was that like once you did get in, and kind of the evolution into now? I know that's a loaded question.
That's a lot of questions. Let's answer one.
Let's just start with, how did you get into the space?
Okay.
I was kind of I think it's pretty accurate to say that I was pretty much a loser in my early life. I don't think anybody I know would dispute that. I went to law school. I found my way in law school at night. I was working as a CPA, not as a CPA, but as an accountant during the day, going to law school at night. I went to law school because I didn't even know what lawyers did when I was in college, but I was an accounting major, but not a very serious student. I mostly played hearts. And in my senior year, one of my heart playing buddies, who was also an accounting major, took the law boards. He was more of a grown up than I was, and he did pretty high. And I knew I was a better hearts player than him, and I wanted to show him I was smarter than him. So I took the law boards also. At the next month or so, and I got in the second highest in my senior class. I was in the 97th percentile, as I recall. And it got a lot of attention. That was a big deal. And the dean actually called me in and said, you should go to law school, even though you're an accounting major. And I had to remind the dean I was on academic probation at the time. And therefore, it wouldn't have been a serious application.
That's so surprising to me.
Yeah.
I was on academic probation because even though I had all C's in my accounting courses, which would have kept me right off academic probation, I got an F in mythology. And I got an F in mythology because I was studying hard for the exam on the same day everybody else was taking it, because I had the wrong date in my calendar. So I got an F, and the teacher wasn't very sympathetic, so he gave me an F. But I applied to law school at night, only because I wanted to take the CPA exam, I thought, and become a CPA, which I did. And so I wanted to not have it interfere with that. So I started law school, and I loved it. Loved it. And I went at night, and it was an extra year, because in the evening. So it was a 4-year program. In 1965, in my third year, I took a course. I forgot what the course was called, probably creditors' rights. It might have been secure transactions. And it was taught by Professor Homer Kripke. Professor Kripke, a name that might pop up again, changed my entire life. Thanks to him, I'm here talking to my friends right now. And Professor Kripke taught us the Uniform Commercial Code. He was, I say with goosebumps, the first human being ever to say those 3 words adjacent to each other: Uniform Commercial
Code.
He was an author. He wrote it. He, among others, he spent a decade writing it. And he was a scholar. And when he was teaching us the course, it was not yet the law in New York or in California. It was about to be, it had been passed, but it became effective on September 1st, 1965, as I recall. And so when you studied the UCC, you couldn't really study case law because there weren't any cases. There were like four cases in the whole UCC. I fell in love with it immediately. And I went to Professor Kripke and I asked him, can you help me get into this business, this thing, the UCC? I love it. And I loved secured lending, even though there was like very little activity. And he made a phone call. He was gracious enough to make a phone call to a friend of his, who was a lawyer working for a factoring company. It was huge at the time, no longer around, called Walter E. Heller and Company, founded in 1919 in Chicago, which had a big New York office in what was then called the Pan Am Building at 200 Park Avenue. And he made a phone call, and he got me a job as associate counsel, working with another lawyer who was the lawyer for the New York office. And maybe, Jen, this will be of interest to you. It's fair to say that the first document I touched was a participation agreement.
I thought you drafted the first participation agreement. I mean,
I learned, and I sat there and discovered factoring, and because I was an executive, barely, I would sit in this very small coffee room, really small, 2 little round tables, where the credit executives would talk about credit, just talk about old-fashioned credit, predicting the future by looking at numbers on a balance sheet and P&L. And they could predict survival or failure. I was astonished. And I just sat there. I felt like I was backstage at a rock concert.
That is so crazy to me. I just don't, but that's awesome.
And so I learned factoring, and I learned participations and asset-based lending, and could not get enough of it. And whatever I was doing in 1966 in their Pan Am Building, I'm still doing today. Exactly the same.
So it's interesting to me because it's a very rare, I feel like, to have someone that is a CPA or was a CPA and has that background and an attorney and in specialty finance all at the same time. So it gives you a very unique perspective on kind of all the things that we see as lenders, and you're a lender as well. And so like, it's interesting. I don't know if everyone caught all of that together, but I don't know very many people that are both.
Right.
You know, Jen, I like to say, and I believe it's true, I learned asset-based lending, the business part of it, from the generation who created it. The mature business people who I sat in that coffee room and listened to, they grew up before there was a UCC. And they were just credit grantors.
Right.
And that was at a time when bankers were credit grantors. Now bankers have little or nothing to do with the craft of credit. Nothing. It's incidental. Bankers aren't lenders automatically. When I grew up in the world, banker equaled lender. You weren't a banker unless you were a lender, and that was what a banker was. They were lenders. Now bankers are not lenders. Whatever they do during their workday, they do not do lending as I watched it being done when I started.
Well, there's different shifts, right? Because you were able to witness, the UCC, the drafting, all of those things, and the breakout or I'm going to say formation, you would know better, of factoring and kind of breaking that out from banking and asset-based lending and all of those things that have happened over the last, I think you said 60 years, which is crazy to me.
What happened? Banking, when bankers were lenders, they were primarily, almost exclusively, short-term, unsecured lenders. They lent during one business cycle. They made 90-day, 120, putting aside equipment loans, something different.
Right.
Yeah.
But working capital loans, they made loans to enable businesses to acquire inventory, to sell them and create an account and to have the account pay. And that was between acquisition of goods, and there wasn't much importing then, so all
Mhm.
the acquisition of goods was all domestic. Uh, Acquisition of goods, you lent money to acquire goods, you you carried the inventory loan with a borrowing base. The inventory loan was replaced by an account when the goods were sold. The account was paid, and the loan was paid in full.
Mhm.
So these loans weren't evergreen revolvers.
Mm.
They were a series,
A series of
hundreds
loans.
short-term loans, all of which had their own cycle. That's what lending was in those days. And when the UCC was adopted, I mean, I would, you haven't got the time to have me tell you how you made loans when there was no UCC. You haven't got the
We do
time.
not have the time,
No.
but I would like to hear it one day.
Yeah.
It was complicated. The UCC made it like a mouse click, but there was no mouses then. There were mouses, but they ate cheese. They didn't do things on a screen. And so the
Mm.
when the UCC was enacted, lending, secured lending, became so easy. And from a legal standpoint, so low risk that, as I like to say, even bankers could learn to do it. And
Mm.
thus, in the 60s, all of the lenders who were always asset-based lenders but had no UCC in the 60s and 70s and 80s, these lenders who had been around for since World War II, they all got, or many of them got bought by banks
Mhm.
because banks couldn't possibly teach internally how to do this stuff, and they just bought it. So I can tell you from memory the factoring company that became Chase Factors. I
Hmm.
can tell you the name because I can tell you the address. I can tell you the address in Manhattan of that factoring company
Wow.
as banks acquired factors.
Mhm.
And so, and the interesting point I'd like to make about the old days of factoring and asset-based lending, almost every factoring company
Mhm.
had as its name the name of the founder, like Walter E. Hill and Company.
Mm.
They all had. They were big businesses, but they were little, and they were run by a cadre of incredibly smart, motivated, brilliant lenders. And that was the world in those days, in the 60s and 70s and 80s. The most of the independent factoring companies and asset-based lenders got absorbed by bank, and only like Rosenthal and of
Mhm.
Milberg.
Yep.
Oh
Notice
yeah.
company Rosenthal, Milberg, the founder's name. They still have that.
Right.
They
Yep.
uh, they left behind only a few independent factors. The rest got absorbed.
Yeah.
Okay,
But
so that
that
was
factoring
then.
that I mentioned has nothing to do with what you do. So if you think you're a factor, somebody misled you.
So
For sure.
I want to jump in there, as you were, you know, considered as one of the founding fathers and in the rooms with some of the founding fathers of, the factoring product, asset-based lending, the UCC, which is just bizarre to even think about. Where have you seen, like, what are some big shifts that you have seen where it went from, a product that is nothing like it is today? Like, what do you think caused some of those changes to
Hmm.
occur?
Well, I'll tell you the perspective that I bring to your answer, and then I'll give you the answer.
Okay.
So there I was a factoring lawyer in the
Mm-hmm.
garment center of New York City, in the thick of it,
Mm.
ground zero, learning from people who invented it.
All right.
And I knew I was privileged. And all of the lawyers in my generation, And when I say my generation, my life was my birth as a lawyer is the same birthday as the UCC. We were born almost the same month. Me as a UCC lawyer and the UCC as something to know.
Mhm.
And so my lifespan is although hopefully it's going to outlive me. My lifespan and the UCC are almost to the month identical. It's like all divine. So I was a factoring lawyer, as a whole bunch of others in the garment center. Uh, in 1982, 1983, I left New York, left the practice of law in Manhattan, and a pure lifestyle change. Went to work at Crocker Bank in California. There's no more Crocker Bank. Is that
I'll say I didn't know that you went to a bank.
there then?
Mhm.
It was there then because a factoring buddy of mine, a classmate from law school, by the way, became general counsel, and
Mm.
he asked me to join the legal department. No big deal, not a fancy job. Just the bank was in trouble and he needed help. He was general counsel. He said, "It's a really cool legal department, whole bunch of misfits. You'll be perfect." So I made a lifestyle change. I went to California.
From New York to
And
California. I just want to point
from
that
New
out.
York, we moved to San Francisco. Okay.
Wow.
And right about the time Montana started to throw touchdowns. So my lifespan is coextensive with Montana's career. No accident. So I'm making, I'm a transactional lawyer at Crocker Bank, sort of left the practice of law. And I remember the name of the company. And Crocker was considering making a loan. I was a transactional lawyer in the legal department.
Mhm.
And I got a borrower, a prospect named, I still remember the name, guys.
This
California
memory is impressive.
California Factoring and Finance. And I forgot the last name of the guy. His first name was Jim. And it was a partnership of all things. Oh my God, a partnership. And they were going to borrow money. And I was told they were a factor. I said, if they're a factor, I would have known about it because I knew every factor. And they sent me the transactional documents. And I said, "You got to be kidding me. What do you mean it's a factor? They're an asset-based lender. They're lending against accounts receivable, 80% advance, but they say they're buying it and they're charging fees, not interest." I said, "Who said they're a factor? They're not. I don't want to break their hearts, but they're not a factor."
Mhm.
So that was my introduction to what came to be called California factoring. That's how it was described to me. So somebody in the West Coast, probably in San Jose, it might have been I forgot the name of the company now. It was a company in San Jose, pretty large, out of business. Uh, so it started, I believe, in California. And I don't know why it started or why they called themselves factors, because they're asset-based lenders, but they use factoring language. But they buy accounts with recourse,
Mhm.
which is not factoring. It's asset-based lending
Eh,
with
depends who you ask.
it's just like, of course, factoring is the purchase of accounts. And these people say they buy accounts, but they're liars because they don't buy accounts as a matter of law. So that was my exposure. And this practice, this business model starts to grow. People like it in California. And so a bunch of factors got formed. Some of them are still dear friends and almost charter members of the IFA, still around. But I'm not going to give Steve Troy any more publicity.
Oh, we love him.
No,
Yes.
Steve Troy was maybe my first really successful, overwhelmingly successful California entrepreneurial factoring company. And that's so these factoring companies, they no lawyer knew what they were doing about this stuff because it was all too new.
Mhm.
But I was a credible factoring lawyer. I came from like the belly of the beast.
Right.
Mhm.
I could legitimately say I'm a factoring lawyer, which I was. I knew all about it. So it was easy for me to build my practice because I was like the only one.
Yeah.
No other lawyer would
That's
ever
true.
Yeah.
identify as a factor, you know. So it was me. So I became associated with factoring in California. Uh, Not by any brilliant self-promotion. I was the only real factoring lawyer at that time, even though It had nothing to do with factoring.
Well, and there's
What did
still
that-
not a ton of factoring lawyers out there. I feel like with that kind of specialty, there's several, but not to the same level. I mean, as that knowledge base of the few, I'd say
Right.
fewer than 10 people out there. So yes, and when I think of like the International Factoring Association, because you mentioned the IFA and the charter members, I mean, I think you'd said earlier in a conversation I've been to every single one since inception.
Yeah.
Um,
I'll tell you the
I
first
feel like
one
there's
was-
got to be other people that were there. We know a lot of people.
I can't. I can only remember some of them. I can't remember most. There were only 26 at the first meeting.
I did hear
26
that.
at the first
Yeah.
convention.
Yeah.
Mhm.
So now the history of the IFA is kind of interesting. So I leave Crocker Bank when Crocker Bank got bought by Wells Fargo, and I went back into private practice. And so now I'm a factoring lawyer in California at some law firms. Ended up at Buchalter because my practice kept on growing, and I outgrew small firms. And Buchalter was the perfect home for me. And uh, as an aside, my relationship with Buchalter started in 1969, but they don't
Oh.
know it. When I started at
They don't know
Otterberg, New York law firm, still around, and
still around.
very active in factoring. When I started at Otterberg in 1969, after I left Heller, I was told we had something called a Rolodex. You guys don't have no idea.
I know what a Rolodex is.
I've heard of them before.
on a round wheel. And I was given, I had a Rolodex, and there was a name on it of a collection lawyer
Hmm.
in Buchalter. And I was told, because New York was very smug, it was the center of gravity, and nobody outside of Manhattan knew what they were doing. So New York was very arrogant collectively, the factoring world in New York City. But and Otterberg was at the center of it, still is.
Hmm.
And I was told by whoever was teaching me, probably Dan Gutterberg at Otterberg, who I worked for, look, if ever you have a problem in California involving factoring, there's only one law firm that knows what they're doing, and it's Otterberg. It's Buchalter, then called Buchalter, Nemmer Fields, and Younger. And so they gave me a number. If you need help in California,
Just
since
like
no
call Saul or whatever.
Yeah.
call this guy. Do not call anybody else,
Okay.
and do not call any other law firm. Call this guy at Buchalter.
Hmm.
If you call anybody else, you're fired. So that's how I met Buchalter, probably in March of 1969.
Hmm.
But so it's all one big happy family, as you can tell. So here I am at Buchalter in 1991, and I'm a factoring lawyer and have lots of startup factoring companies, and I'm having a good time, loving it. And there were a lot of the factoring software companies that now exist didn't
Mhm.
exist then,
Right.
but Distinctive Solutions did, and they were the first company, other than one other company that was dabbling in factoring software. Distinctive had the only decent software,
Correct.
and the
Mm.
president was Bert Goldberg. He should
Mhm.
rest in peace. And Bert was the president. He was a coder. He was a nerdy guy's coder, and he had sales responsibility. And he heard about me, and when he would sell the software, he had a 2-day training program uh,
Yep.
to learn how to use the software. And everybody buying the software was about to start a factoring business. There was nobody who was already a factor and just wanted different software, because there
Right.
was no different software to get. Unless you were doing it on 13 column buff colored columnar paper,
Mhm.
you couldn't be a factor without the software. Too
Correct.
complicated. So he would have sales resistance when he was selling software. He would sell people the software, but how could they be a factor? Had no forms and didn't know how to do it.
Mhm.
They just wanted to be an entrepreneur. So he had sales. So he approached me. He said, Bob, I want to change my 2-day training program to throw in a third day how to be a factor. And can you do that third day? And I will pay you. I will increase the training fee, and I will pay you for that day. I said, you got it. And it was magic. 'Cause
It was
so-
magic. I wasn't there then, but I mean, when he developed the software, you know, Deborah and others in the space, Zuconic with Dare now, and even my husband helped test it, and it started this whole community of people, and we've talked about it. Even when we met with Tanya about the IFA, it was launched by Bert. It was his idea, and
His idea. And,
yeah.
and then what happened was, so everybody who I trained,
Mm-hmm.
literally, it's the same lecture I give today, Law and Business of Factoring, but it was only like half a day.
Right.
And they all said, "Hey, Bob, this may be out of place, but would you mind being our lawyer?"
Mhm.
And I didn't say, "Well, I'll get back to you." I said, "You bet." So, so I acquired like a client a week from
Wow.
Bert. It was the most symbiotic relationship on the planet. It was magic. He
I
saw
didn't realize that either.
and I got clients. Um, and also I could design my factoring contracts around the software. It was all magic. So now fast forward, that was around early 90s. Then fast forward to 1996, and Bert wants to have a user group meeting for users of the software in San Luis Obispo.
Yes.
And he said, "Bob, would you mind coming down to San Luis Obispo and just spend an hour or give them a tip?" I mean, they were so rookie. They were all rookies. So I could spend like half a day on notice an assignment and they would love it. It's like, so I went down there and I gave this lecture. And the group was all entrepreneurs, still is today, all entrepreneurs, all high energy. They just want to make money. My favorite, because I'm a libertarian. I just want to be around entrepreneurs. So I said, and I was active in at that time called the CFA.
Mm-hmm.
The Commercial Finance Association.
SFA.
Yeah.
It's now SFA. So, and the CFA was big factors,
Yeah.
big boys, and big banks. And so all the entrepreneurs, all of the Entrepreneur Growth Capital, Dean Landis, and all the others,
Oh,
they didn't really have a home because they had nothing to do with huge factory companies.
Yeah.
It's a different world. So they were members of the CFA because there was no other game in town. And I remember the CFA, to cater to them, they formed a committee called the Small Entrepreneurial Factoring Group.
Hmm.
And they met at the CFA annual convention.
mhm.
And I would go to those meetings because that's clients or people I wanted to be my
Right.
client.
Right.
I would go there with business cards. And you go into this meeting of the entrepreneurial small and medium-sized factor group. They would go in this windowless office in the basement of some hotel. They'd have a meeting at 2 o'clock in the afternoon before some cocktail party. And they had a chairman, and the chairman said, "Call the meeting to order." He'd say, "Okay, what should we talk about at the next meeting?" And they discussed it, and they made an agenda for the next meeting, and they went to the cocktail party. So if you wanted a real trade association, that was it, but it was terrible.
Yeah.
So I said to Bert, Bert, don't limit this group to just users.
Mm-hmm.
You have a lot of orphans out there, the CFA, who have no home.
Yeah.
Open it up to them. That created the IFA. That's the history of the IFA, which it is today.
And you were, so Bert passed several years ago, 4 or 5 years ago, and you were the first recipient of the Bert Goldberg Award, I believe, 4 years ago.
And I was on that stage, and I was crying.
Yeah.
I was crying. I was crying because Bert meant so much to me. We had this intimate relationship, symbiotic. Anything he wanted from me, I would do. I was never could build anything of the kind. Of course I wouldn't.
Yeah.
I would do anything for the man and for the IFA.
And he did a lot for everybody to bring them all together. So it's yeah. So
And that was it. And that was it. And then that's the history of the IFA. And
Wow.
here we are today with 500 or whatever number of
Yeah.
members.
Yeah.
So
a
what's
very
changed? Like I know you talked about the biggest things that have changed. It sounds like the creation of making a community for the people that were entrepreneurs that wanted to enter the space is one of the bigger changes that have occurred to help people get into factoring. Is that is there other something else that you feel like is a
oh,
key
yeah,
piece?
there are profound changes. Um,
We can't go through all of them
main
today. You might have to come back for like a
Yeah.
sequel. Just saying.
the main the main I'll answer your question. It'll seem backwards, but I'm
Okay.
really answering the question.
Okay.
The biggest surprise as I look back over this career, I don't want to sound like I'm not doing it anymore.
You're
Uh,
still doing it. Yep.
Right.
I'm gonna go to bed an hour later tonight to make up for the time I spent with you guys. So I work 7 days.
We
I work
appreciate it,
7
Bob.
days.
Yes, thank you.
I work 7 days a week. I work 7 days a week. So, but what surprises me the most is I would describe the IFA as being run by, not exclusively, but predominantly young, energetic, entrepreneurial, in all capital letters and underlined, uh, business people.
Mhm.
Given that, what astonishes me is
Oh, no.
because the business model is pretty gosh darn good
Hmm.
and low barrier to entry and not a lot to learn. You could do it. It's I don't know of any business other than by buying, a yogurt franchise at an airport where they just, or a franchise, any other franchise.
Right.
Other than that, there's no other business you can get into so easily. It's astonishing. And
You
what's
say
so,
that.
It-
Well, hold on. You say that, and yes, people can get into it, but I feel like if there are more nuances to learn because we see people
Right.
enter the space, they do a bunch of deals, they think they're not going to ever lose money, then they lose a bunch of money, and then they exit the space. So I think
well,
it's
that's
more than opening a yogurt shop. Yeah.
I'll get to that in
Oh,
a
okay.
second, new entrants. But the point I wanted to make was actually the opposite. What surprises me, and I almost would say disappoints me, because I'm a credit guy. Now, I'm a credit
Okay.
guy in my
Right.
core. I was born to do credit. Is that how I'm going to use a strange word, but it's a word that I carefully select. What astonishes me is how conservative our industry is. What do I mean by that? The industry carries on business practices the way it was done 40 years ago.
Hmm.
It's like Amish meets lending. I mean, it's like, and the factoring industry as a whole is because the basic product, 80% advance, don't do construction, be careful with healthcare, no over advances except once in a while, don't ever do inventory equipment loans, all that stuff. It's so conservative and rigid. And when I do my factoring lecture, my favorite part is the opening 10 minutes. After I tell people all if they think they're factors are a bunch of liars. After I do that, uh, I then ask them, what's your typical? I know it varies a little.
Hmm.
What's your typical advance rate? Well, 80%
85,
advance,
yeah.
maybe
Yep.
85. I said, okay. Here's the question: why not 90? What is there about 80? Is it like your lucky number? Is like that's your birthday? What is it? And why 80? And they will say, that's the way I was taught.
Yeah.
Well, the first guy who did it is dead. And he's dead. And no one knows who it is. And the point is, you do 80 without any data that shows you would not make more money if you advanced 95. There's
Hmm.
no data. There's just 80 is nice and conservative. 85, you start to live on the edge. 90% advance, you have a death wish. That's like what the industry thinks. And how about inventory loans? How about unsecured loans? Short term.
Okay, now there you cross the line. We actually are seeing more and more lenders adding 90%, 95%. inventory loans. But then we see people do that don't understand the nuances. I know you're going to get to that, and then they have problems because they're not doing all
But
the
they
other
do
stuff.
understand it. But look at the premise. You said they don't understand it. How about if they do understand it? And I point
Sure.
out that you asked me, Nolan. You asked me about what have I seen.
Mhm.
Well, we can spend hours on MCA. We're not going to do that. Although
Yeah,
I-
no.
Right.
because the history of that product.
Oh,
I
and
could give-
MCA for the audience, merchant cash advances. Sorry.
Mhm.
I know.
Yeah.
Okay, thank you.
Thank
you. I do what I ask others not to do, which is use acronyms and jargon.
Well, you're allowed to. You're the
Yeah.
guest. You can say all those things. Yes.
But the point is, I am not advocating for anything other than why don't you do it? There are other lenders who do those related products,
Mhm.
whether it's unsecured or equipment or inventory. And the point I try to make to my clients, to my friends, to factors, once you have a first lien, you own the client. It's your client. Anybody else who wants to lend needs your permission to do so. So why in the world would you allow another lender to make a loan to your client? It's your client. Is that other lender smarter than you, or do they know so much that you could never learn it? If you could learn it, of course you can, then why don't you learn it and do it?
Mhm.
And behave like the asset-based lenders that taught me how to do this stuff 40 years ago. They wouldn't think of just doing one product.
Mhm.
They were asset-based lenders. At Walter Heller, where I started my story, they did everything. It was their client. And now apologies, I equated to a marriage. Can you imagine a marriage where one spouse
I'm like really
doesn't
scared what you're going to say
Yeah.
right now.
everything they need, and so the spouse who is not getting what they want has to go outside the marriage? It's that sense. I think a borrower who had a relationship with a factor, for them to go outside the factor, the marriage, outside the factor, for money is a sin. Look, banks do it. Banks, once they have a client, they want to cross sell like crazy. They want to sell everything from credit cards to
Yep.
estate planning. Now, I'm not saying that, but banks have long since learned the cost of acquiring a borrower is high. And once you spend the upfront money to acquire a client and build a relationship, how dare you squander that relationship you work so hard to get? Why do you let others share? No. And I'm not saying what I'm saying works for everybody. Of course it doesn't. But it works for some.
Right.
Right.
And once you learn to do that, now you're offering like a bank, you're
Yep.
cross-selling within your company. So it's the resistance to do so, the
Mhm.
reluctance. And the
Right.
reluctance is because business is too good the way it is. Well, if that's what you want, that's fine.
Yeah.
I'm not saying you're wrong. I'm just inviting people, begging people, expand your horizons, open it up, and take advantage of the fact that you have a person.
You're a salesperson's best advocate. That's music to our ears.
Sound like a
Sounds like just we can do it. It'll work. Why not? That's
Like, don't
yeah,
listen to him.
so I know we're running short on time, but there is something I really did want.
Speak for yourself. I'm not.
Yeah, we're good.
I got all day.
One of the things that I'm very curious about is you've seen the shifts in the space from when you started till now. What is your kind of crystal ball based off the challenges that
Ooh, I'm interested in
lenders
this.
are facing today? Whether it's
What do you
regulation,
predict?
like what shifts do you predict happening in the future in our space?
I'm not going to seem very brilliant because I'm going to answer it in many ways with very obvious answers.
Okay. Hey, I'll take it.
It's only because I consider them to be the right answers.
Uh-huh.
And Jane, you and I have been around for a long time, and we've watched it happen. So I'm not saying this is going to happen. I'm saying this is going to continue to happen.
Mm-hmm.
And you can finish my sentence. There's going to be consolidation.
Okay.
Yes.
There's going to
Agreed.
be consolidation.
That's already started. I mean, we've seen more and
Yep.
more acquisitions and yes, transactions that are occurring, and I think that's going to continue over the next year or so. So
Well, more than a year, more than a year. It's inevitable. And the the even though I was passionate about factors expanding their product portfolio, the the difficulty in doing so is most factors are reliant, in addition to Haversine and where you provide capital, where you provide funding for factors so they can do deals they couldn't do without you. Uh,
thank you
but
for the shout out.
most of your clients and most of the industry is reliant upon bank lines.
Mm-hmm.
And
And that limits them.
banks
Yes.
will, in the one horrible paragraph defining eligible collateral, banks will limit what their factoring borrowers can do. So even if a factor wanted to do inventory lending, chances are the borrowing base would prohibit it. So since banks become gatekeepers of what factors can do, even if I had persuaded somebody that the business model I suggest made economic sense as well as intellectual sense,
They still need
as well as
capital to do
Yeah.
it. Yes.
that
Yes.
you can't get bank lines, which means now you're down to private equity or you're down to hedge funds, and that brings with it a whole other plethora of problems,
Mm-hmm.
uh, which makes life, which means what have I gotten myself into kind of approach. So there are structural impediments to factors doing what I said, which means you're limited as to which banks will be willing to give you the money to do so. And it's kind of, and the burden is banks will want you to have demonstrated the ability to do it. But how can you demonstrate the ability to do it if your existing bank doesn't let you? So
Right.
there's, that's where we are now.
What do you think's driving the, like, in your opinion, driving the acquisitions? Is it more of there's a lot of private credit money out there that needs to do something with the money they've been holding on to? Like, what do you think drives that? Is it banks? Is it, what is it? You've been around, you've seen all the different trends.
Mm-hmm.
I will answer it only partially because I'm not that smart to be able to look into the minds of so many different people. But I will point out that factoring would appear to an outsider to lend itself to economies of scale. Look at Triumph Pay for by way of example.
Mm-hmm.
Triumph Pay is a transportation factor, but once they figured out the secret sauce of offering multiple products uh, and going upstream and downstream at the same time.
Mhm.
And by the way, transportation lends itself to that
Right.
because the very unique structure of brokers and shippers, and it's all intertwined. So the concept of one big fat database where everybody is signed on to um, works in
makes sense.
transportation,
Yeah.
but the Factor Pay, Triumph, and others, there are others who have a similar model, not as effective, a
Mhm.
similar model. With economies of scale, they can reduce the product cost. And what happens is, so you get to a point where once you get to a certain size, this is now, I don't have any inside information, just an observation, and I
Mhm.
could be wrong. But once you do that, in the Triumph Pay platform, factoring is a small piece. It's one component of a suite of
cover all.
Yeah.
products and services and data. And so there, what Triumph Pay has done brilliantly is make unsecured credit a commodity. It's a unsecured credit is a commodity now, and it's simply in the mix of a whole range of services. And I dare say it's inevitable for the factoring product to have the same approach. Once you get economies of scale, you can securitize and commodify it, lower the cost, and eliminate the barriers of entry. And what happens is, just like what happened maybe 20 years ago in the real estate industry, there used to be a huge industry of independent uh, real estate mortgage brokers who would be independent and place mortgages. They got replaced by Rocket Mortgage, all the
Yeah.
others.
Oh, yeah.
Yeah.
And what did they do? They skimmed. So a large portion of lending can be highly automated with no judgment required, and leaving behind the hard ones. So the independent mortgage brokers are left working their butts off,
Yeah.
spending huge amount of hours. I watched it happen to place a mortgage, and the amount of time you spend for the lousy $10,000 commission, it's not worth it anymore because all the easy stuff got skimmed. So I think what's going to happen is the easy factoring, which is what happened in transportation, gets skimmed, leaving behind the hard stuff, the stuff that's far from automatic, which is riskier or time consuming, and you can't make a living anymore. So now, by the way, in the merchant cash advance world, that's kind of what happened a bit, because merchant cash advance is an unsecured loan, and merchant cash advance companies make money. They're not suicidal.
Right.
They make money and they're smart. So if they can make money making unsecured loans, it's because they're making unsecured loans to the right people, for better or for worse.
Right.
And so, but who would make that unsecured loan that's safe if they didn't? The answer is the audience to this podcast. So that's true. So
It
therefore,
is true.
Yes, it
We
is.
love our
so
audience.
therefore, the merchant cash advance industry is living off the easy loans that you won't make, and they're living off that. So you're looking at the product as if they were making unsecured loans without any care whatsoever, but they're not. They're lending the goods to the good stuff at a high yield, and that outstanding would come from you if not from them. You're filling because you will fill the need. They are. So that's what's likely to happen. Is all the easy stuff, the easy credit gets skimmed off the top and leaves you with the hard stuff.
Well, I wish we ended on a better note then. Never mind.
Yeah,
That's
but
so
it
good.
is
Good.
it's
That's the first thing. You own the client.
that's a fascinating perspective.
If you
Yeah.
give up business, you do it voluntarily. It's not like you're.
That is an interesting analogy and perspective. So
Yeah.
if you fight for it, you should keep it.
Yeah. Something our.
Interesting, but not correct.
Yeah. I feel like we barely got to scratch
I
the
know.
surface.
All right, you're gonna be a repeat.
Yeah. it's-
Repeat, guys. There's
it-
way too much to talk about.
There's
So.
been a lot of this coming to age story is it's the first time I'm hearing it, so it's super fascinating, and I'm really excited to we'll have to set up a time to dig in more, since we barely got to. I feel like there's so
We
much
didn't get to
more
any of the questions.
What are you doing tomorrow? What are you doing tomorrow? Now?
Well,
apparently this.
no,
but-
Bob, thank you so much.
Yeah.
Because, and I don't know that everyone really understands like how much you've done and what you still do, because you have your practice and you help factors and asset-based lenders all over. You teach. You are one of the top speakers at the International Factoring Association for your sessions.
I work on the statute, and I'm very.
See,
active.
I know there's a lot. I can't even get to it all.
Yeah, we would need to print out a double-sided list
Yeah.
to continue going down it. It's truly,
It's impressive, and it means a lot that you were
it
here
is
to help
very
share with
impressive.
everybody today. So I thank you for taking the time to do that. So,
Absolutely.
Much.
It has been a pleasure. We'll have to get you back to continue and go through all the questions we didn't get
to.
yeah, but it's been a
Well,
pleasure.
if you beg me and you're really nice to me, I'll consider coming back.
All right.
I don't
I'll
want
hold you to that.
I don't want to overpromise.
Yeah.
it's fair.
And Jen, thank you for
And
joining me.
Let's go show up and listen.
Yeah. I didn't have to drag you back. You willingly came this time. So
Did.
very exciting. And to all of our viewers and listeners, thank you, especially once again for, joining us on another episode of In Focus with Haversine Funding. Remember to stay informed, stay inspired, and stay on course to growing your financial platform. Until next time.